They used to say, water was life. But today, the markets say it's something else. A commodity, a hedge, a profit engine. For the first time in recorded history, the price of water can rise and fall on a digital chart just like gold, oil, or soybeans. The same trading desks that once gambled on mortgages and metals now watch the level of reservoirs and snowpack like stock tickers. And behind those glowing screens is a shift so profound it forces humanity to confront a question we've avoided for thousands of years. What happens when thirst becomes a business model? This is the Financial Historian, where money, power, and the past collide, and where nothing is ever as harmless as it seems. Because what's unfolding in modern markets isn't innovation, it's repetition. Every empire that believed they could own the natural world, from ancient irrigation states to industrial superpowers, learned the same truth. Controlling water means controlling everything built on top of it. Long before Wall Street created a water index, the first civilizations formed around rivers that acted like economic arteries. In early Mesopotamia, water wasn't bought or sold. It was worshipped. The Sumerians carved channels through the desert mud, engineering the earliest irrigation systems that birthed cities. Egypt tied its destiny to the Nile. One flood, one harvest, one empire. When the river rose, too little or too much, dynasties collapsed. Water wasn't wealth. It was fate, and yet even then, power learned to monetize it. The earliest laws humanity ever wrote, the Code of Hammurabi, included punishments for stealing irrigation water or damaging canals. Depriving a farmer of water wasn't a crime, it was war. In ancient Rome, water became more than sacred. It became infrastructure. Aqueducts carried fresh water across valleys, mountains, and open countryside, feeding fountains, palaces, bathhouses, and entire neighborhoods. But beneath the architectural brilliance lurked a familiar inequality. Wealthy families diverted flows toward private villas, while poorer districts waited for public fountains to release a slow Unaben. Rome's aqueducts functioned like early utilities. Public, but managed by the elite. As Rome grew, its leaders discovered that water could be weaponized just as easily as it could be distributed. Armies besieged enemy cities by cutting aqueducts instead of marching armies. Senators flaunted estates built around private springs and pools that symbolized more power than marble ever could. And when Rome fell, its aqueducts became stone ghosts, reminders of how even an empire cannot outlive the source that sustains it. For centuries afterward, water remained a defining force of civilization. Monasteries in medieval Europe built mills along rivers, turning water flow into economic leverage. In Persia and North Africa, underground channels called qanats turned dry landscapes into thriving cities. In China, dynasties rose and fell by their ability to tame floods and irrigate rice fields. The pattern never changed. Whoever mastered water mastered the world around them. Then the Industrial Revolution arrived. Water stopped being spiritual and became mechanical. It powered mills, factories, steam engines. It turned rivers into the veins of industrial capitalism. The formula was simple. Control the water, control the economy. By the 1800s, surging populations in London, Paris, and New York triggered sanitation crises. Cities needed vast water systems to survive. Governments and private companies built dams, pipes, and treatment plants. Infrastructure that would quietly become some of the most profitable utilities on Earth. But the imbalance persisted. Private companies prioritized wealthy districts and left poorer communities with contaminated wells. Eventually, cities like London nationalized their water systems to stop exploitation. But even state-owned systems didn't erase the truth. Water was no longer a shared natural resource. It had become a service, and services have bills. By the 20th century, water shaped geopolitics. Dams turned rivers into power plants. Pipelines turned deserts into farmland. Nations realized that whoever controlled water sources could influence their neighbors' economies, food supplies, and political stability. The American West is the clearest example. Cities like Los Angeles weren't built where water flowed. They were built where water could be taken. The Owens Valley water grab in the early 1900s drained a farming region to fuel Los Angeles's growth. Legal on paper, devastating in reality. A classic story. Public need, private gain. As global populations surged and climate patterns shifted, water became even more valuable and more contested. The Nile, the Jordan, the Indus, the Mekong, all became geopolitical flashpoints. The stakes weren't ideology or oil, they were survival. Then, in the late 20th century, globalization introduced a new force, privatization. Under pressure from the World Bank and IMF, developing countries were told to privatize water systems. The promise was modernization. The result was exclusion. Prices soared. Poor communities were cut off. The most famous example, Cochabamba, Bolivia, saw protests erupt when residents were charged for collecting rainwater. Rainwater ownership had reached the clouds. The revolt overturned the government, but the trend didn't stop. Because once something essential becomes measurable, finance finds it. In 2020, Wall Street took the next step. Water futures. The CME Group launched the first futures contract tied to the price of California water rights. Suddenly, investors could buy and sell water exposure the way they trade oil or copper. The contract doesn't trade actual water, it trades the right to use it. On paper, it's a hedge. In practice, it's an open door for speculation. And the ones trading water futures aren't farmers or local communities. They're hedge funds, asset managers, institutional speculators, people whose profits rise when scarcity rises. Drought becomes a trade. Thirst becomes a price signal. Catastrophe becomes a chart pattern. History has seen this pattern before. Spices, coal, oil, every essential resource eventually became a market. But water is the first resource with no substitute. You can replace coal with solar. You can replace gasoline with batteries. You can't replace water with anything. That's why BlackRock calls water the new gold. That's why Goldman Sachs calls it the petroleum of the 21st century. And that's why entire nations from Australia to Chile are experimenting with water markets, with consequences that push small farmers out and pull speculation in. Economically, markets claim this is efficiency. Ethically, it's instability disguised as logic, because once survival has a price, someone eventually gets priced out. Imagine a future where drought-stricken communities can't afford water at market rates, where nations bid for rainfall, where the price of a river in California affects the cost of food in Africa. That's not a hypothetical. It's a trajectory, and the real danger isn't the futures contract. It asks the philosophy behind it, the belief that pricing something is the same as understanding it or controlling it. But water doesn't obey economics. It evaporates, floods, leaks, moves. It slips through borders and defies ownership. Every empire that tried to master it eventually learned the same lesson. You can build aqueducts, canals, dams, or markets, but you can never fully contain something that sustains all life. Water's new price tag says more about us than about water. It says that the market believes scarcity is opportunity. It says that investors trust drought more than abundance. It says that we are willing to turn the essence of existence into an investment product. And history warns where that path leads. Every empire that commodified necessity reached the same ending. Some things can be controlled, traded, or taxed. But when you try to monetize survival, the cost eventually becomes everything. Because, at the end of the day, you can't drink a futures contract.